The infamous Mr. Gabe Winslow. How you doing, brother?
Good, man. I can't tell you how exciting this is. I've been excited for 24 hours since I got put on there. You
Well,
know, I we've done this before. Carl just said, hey, we've done this before. I said, yeah, we did it before. You did from 0 to 47 in the first year, right? Because that was the
mm,
stage I was on. And like, hey, you've had a pretty good first year. How'd that happen, right? But now that I get to come back for the follow
part
up on
part
from
two.
47 to 150 or 200 or whatever. It's like marking a milestone. So I made the Scotsman. That was one of my goals last year. I made the Scotsman, so that was cool. And then this year my goal is 100 million, and it looks for all intents and purposes like I'm gonna hit that. But those are like minor milestones. I mean, the major milestone is make it on the Carl White's podcast again. So
Yeah,
this is
yeah, yeah,
exciting,
yeah,
man.
yeah. You
I'm
are
being
this.
serious. It might sound funny, but I'm being serious.
You
I
are the
I,
smoother, and I appreciate that, buddy. I do.
I got five. I got five people that I quote to my kids all the time. Okay, the Bible,
Mm,
C.S. Lewis,
mm,
your mother,
mm.
and the great Carl White, because it's always in the great Carl White. I'll be like, as the great Carl White has taught me. And so, being able to do a podcast with you it feels like, man, we're really
Well,
getting there.
well, we'll have to agree to be each other's biggest fan club then.
There you
So
go.
just leave. Okay. So our first one, I forgot the topic of our first one. I remember that now. It was what going from 0 loans to 47 loans, but it was
Right.
47 not for the month, but for the year.
For the year.
Right?
That's right.
Yeah, 0 to 47. So, so where you at now, man? Like, what'd you end up doing last year?
So last year I did about 150 for about 75 million. And then it's funny, the zero to 47, like that happened in a slope. And it's like a stair step, man. You're doing something and it seems like you shoot straight up, right? And then you hit it again and it's a stair step and then straight up again and then you sort of level out. Or for me anyway, it's not a slope line from it's not a slope line with
Not a linear
up and to
line.
the right, up and to the right, right?
Yeah, yeah.
For me anyway, right? And so this year, I think I've hit another upward. We'll have to see before I really own that for sure. But in the fourth quarter, we did um, 65 or 70 loans, I want to say, in the fourth quarter. And we did 14 in January, and we're going to do 20 in February. I say we're going to do 20 in February. I mean, it's January 28th. We still might get a straggler or two in,
I get
but
it.
something like that. So my goal this year was 200, and if you're after February, if you're one sixth of the way through your goal, you're actually probably way beyond that, right? Because January and February are not exactly great months for most of us in the country. I guess you guys are killing it in Florida, right? The snowbirds come down and they buy, from
Yeah.
October to February. But
We we do have a little unfair advantage. I'll can the side we do because, like you said, the snowbirds and you're in the Dallas Fort Worth area.
Houston. So I'm in
Houston.
Texas. So, our schedule is probably like what most people who's listening to it schedule is. Most of your activity probably comes between March and October, I think is
Yeah.
probably pretty standard. So,
Hmm.
that's sort of, being on pace. Last year, my goal was 140, and I think I hit 150. But through January and February, I was at like 10, and I was like, "Ew, this might be really ugly." Like this is, but we got after it, and we saw that jump up. So yeah, that's what we're looking at this year.
Very nice, man. So last year you averaged 12 to 13 per month
Yep.
per month. Here in February you're doing 20,
Yeah.
which is a remarkable jump up. You said, "Hey, we were a little behind the eight ball," and then we you just used the term "got after it."
Yeah.
What does getting after it look like for Gabe?
So, that looks like really paying attention to your database and really paying attention to the people in your sphere of influence for me. I think that's pretty important. We talked about in the first time we did this like 4 or 5 years ago, and probably me, you, and maybe one other dude remembers that. It won't be my wife or kids because they don't listen to this, but they might listen to this one. But we talked about like the importance of winning on Monday, right? Monday was Thor's hammer. When you're starting out, you don't have a big database to call. You don't have a lot of loans in process that you can do your update slash just ask calls on Tuesday, right? You don't have the pre-called and looking. So it's all about sort of Thor's hammer. That's what we talked about last
Marketing
time.
to real estate agents.
Sure,
Yeah.
absolutely.
Mhm.
But now, you get 5 years on, and I've got 800 names in my database or something like that. Now it becomes a lot more of, just paying attention to your database and making sure you're in touch with them, which, you taught me that from the word go. It just wasn't as important to me. I did 3 Mondays. So, I did 3 Mondays a week and ignored Wednesday because I had two loans in my, I had two loans in my past database. Right. But now really focusing on leaning in on, um, updates slash just ask, and past customers. That's where I've seen most of my increase in my traction from. Just buckling down and paying attention to that.
So like here in February, where you're projected to close 20, uh, what percentage, and maybe even most of last year, what percentage of that's refi versus purchase?
Sure. So that was, I hit a big jump up in the fourth quarter, and man, it was dead out there. I think I only did like 8 purchases, but I did like 60 refis,
How
and I
many?
was like 60 in the fourth
Six,
quarter.
six
Yeah, but
zero.
that's all the refis I did basically for the full year, right? Maybe the last whatever. I closed
Yeah, I
about
get
a
it.
hundred. I closed about 100. No, I'm sorry, I did 60 total, so 50 refis, right? So like 10 purchases and 50 refis. Now I'm back to a healthy Carl approved level of purchases and refis. 10 purchases and 4 refis in January, and like 13 and 7 in February. This is something I wanted to ask you. Maybe I should save it for coaching, but heck, we'll let all of America hear it. You always say 70-30 in purchase and refi in any
Yeah.
business, right? Um, do you have a problem if it becomes 50-50 or 40-60 purchase refi, as long as the purchase business continues to grow, but you're just doing more refinances, as long as you can level up it? Like, do you still consider that a healthy mixture?
I do. So the 70/30, I don't think there's anything particularly magical about that. It's just like for me, I look for ways to push myself to do yet even more. And so the way I do it is I have this mythical 70/30 split, which actually we run pretty close to that most years, you know.
Mhm.
But let's say we're 60/40. So we're heavy on the refis. We go, all right, cool. Don't stop what we're doing with the refis. Keep doing that because it's working. I need to put some more gas on the fire for the purchases, for the,
Mhm.
for typically referral partners marketing. And so
Sure.
we run that up and we get it to like 75/25 now. Cause we, not because the refis dropped, because the purchases went up.
Sure.
And then we go, okay, crap, we're at 75/25. I need to put my game up even more to my past database.
Hmm.
And so we just do this constant stair stepping up where each one is pushing the other one forward. Does that make
Yeah,
sense?
it does.
Yeah.
I think I might hit, if at the end of the year, like if I hit 200, it'll probably, if I hit my goal of 200, it'll probably be because I'm doing 70-30 or 75-25 refi and purchase,
Yeah.
right?
Hey, but
But
let's
there's a,
go
go
ahead.
ahead.
No, you go
I
ahead.
was going to say there's a world where if rates go where I think they're going and what happens, and all that comes to fruition. I mean, I might do 300 transactions on accident, right? I mean, because the 150 purchases that I'm really looking for, and I say, hey, if I get 150 purchases, I know I'm going to get 50 refinances. Okay.
Yeah. Yeah.
But if the market conditions are such that we're doing all those transactions a couple times, then I might accidentally hit 300, and then I'll be at 50-50. My
Yeah, no, I
purchase.
get it. I get it, which is awesome. But then we
So is that
go,
cool? You don't
oh, it's
have a
very
problem with
cool.
that?
But then we go, or for me, then I'll tell the team, all right, I almost treat it like two separate teams. I have a
Okay.
purchase team and I have a refinance team,
Okay.
and they're competing against each other.
Sure.
And so if we're 50/50, we tell the refi team, you are kicking their butt.
Hmm.
And we tell the purchase team, they are kicking your butt. You're gonna put up with that?
I
You're gonna
do.
put up with that? And so it's
Yeah.
just a way of like, stair step. Hey, but let me ask you this. So you said like the last quarter you did
Mhm.
50 refis and relatively speaking, almost none before that.
Yeah.
What spurred that? Like what was the what was that strictly just the market, or did you do something with your marketing? Like what made that happen all at one time?
So about a year and a half ago, maybe 2 years ago, I started on this project, And it was everyone that I talked to. And I think everyone should do this. This is, if I have one insight that I think is really good, it's not going to help with your purchase game. Actually, it will help with your purchase game a little bit, but I'll explain that in a second. Every single borrower I had a conversation with, and what have we heard about, Carl, for 3 years now? Affordability, interest rates are too high, yada,
Yeah.
yada, yada. So everyone's conditioned to think that, right? So we talk a lot at every purchase point before they even get under contract, right? We talk about the tension and the balance between what's my rate and what's my cost, right?
Hmm.
And
Hmm.
we just really focus on the fact that, like, hey, if rates are higher now than they've been in 25 or 30 years, they're probably not going to stay higher forever, right? I mean, when someone asks me what are rates going to do in the next year, I go, hey, I know the answer to this one for sure. They're going to go up and they're going to go down, right? I mean, because that's what we know. Rates oscillate in between about a point or a point and a half every year, right? But we have the conversation up front, and it's like, hey, we're going to worry a lot more about cost, because the chances are, if you're getting a loan at 7.25, we were putting people in at 7.25 at this time last year, right? You know, you're probably not going to be in that loan for a long time. So what I promise you that I'm going to do, this is my script. It's not really script. It's just me talking to someone.
Yeah.
Like, hey, you're talking to me. You could go talk to a guy Quicken, and that's a guy that just answers the headset on the leads come in because they advertise on NASCAR and the PGA Tour. And you could talk to that guy and you could ask him what the interest rate was, and he'd tell you, oh, I've got 6.5, right? If 6.75 is the deal, and you'll look and there's 2 discount points on that rate, right? And you say, well, hold on a second, why am I paying 2 discount points on a loan that I'm probably going to refinance out? Except for your customer probably doesn't even know that until it's explained to them, right? Because your customer does this once every 5 years or 10 years or whatever. You and I do. I mean, I do this a couple hundred times a year. You do this a couple hundred times a month, right? But what's my value proposition? My value proposition is like, I'm your Sherpa, okay? I'm your guide. I'm taking you through something that you don't know. And I'm going to be making sure that this isn't just like a one-time trip. This is a journey, and we're hitting mile markers, right? So I tell them, let's look, we're probably like, what do you think, Mr. Borrower? Do you think you're going to be in this loan for a long time? No. Well, then why pay normal closing costs of $5,000, and certainly don't pay discount points on a loan you're going to be out of in 6 months to 18 months? Why don't we instead think about, like, what if we did a loan with no closing costs? So that's beautiful for 2 reasons. One, it's beautiful because the customer benefits, right? And the first thing I do in every single thing is the customer benefits. Otherwise, you're selling something, right? As opposed to being a professional guide, right? So the customer benefits. But two, if 6.75 is the number and I'm competing at 6.5, I don't want to do that. I'd rather put them in at 7 and have them really, really happy that they're in at 7, because I gave them $3,000 or $4,000, Carl, because that's going to raise their payment maybe $100, right, from what they're going to be. And my promise to them is, hey, when that rate hits 6.5, which is what you're looking, I'll call you up and we'll do another one where I give you a bunch of money. We'll structure it so you're not going backwards. I'm not refinancing and rolling in a bunch of closing costs or equity in people's loans. I'm doing these loans, and I'm using my commission to give back rate. And my promise is every 6 months I will look at this loan for you. Actually, about every 5 months, because on a 30-day closing, you start them at 5 months so that you close the day after your EPO's up, right? And maybe Matt Ishbia and some other guys that run the deal can earmuffs on this. But my deal is I want to churn people as often as I can, is what I decided. And that churning has a really negative connotation, because a bunch of guys back in the wild, wild west were doing stuff that wasn't customer happy, right? They'd call them up and they'd be like, hey, you won't ever notice when you roll $5,000 in your loan, and you'll improve your deal like $75 a month. And if you're slick enough and you're glib enough, you can sell that for people. But I don't want to do that. I want to peel back the curtain up front, and I'm good. Like, hey, this is what we're going to do. We're going to walk down the staircase every 6 months or every year, or whenever the market is advantageous to us, and we'll go ahead and do that. And when I was closing 50 refinances in the fourth quarter, like, the market had gotten a little better, but a lot of people were closing 3 or 4 because they hadn't set the table for this discussion with their people. And they're calling their people up and they're saying, hey, I can get you half a point lower. And the guy goes, well, geez, I don't know if I want to write a check for that. But like when we say we're getting you half a point lower, it's from a little bit higher starting point. So we can get you that half a point, but we can still give you money the next time around, Carl. We can still give you money. And we figure out, and we're super radically transparent and honest with people when we do this. We calculate out like that, hey, you're better off taking this lower rate if you think you're going to hold this mortgage more than 34 months, right? I mean, we figure out where that calculation
Sure.
is. And we say, but what's your bet, Mr. Barr? Not everyone takes the higher rate, not everyone takes the goodies, not everyone takes whatever, but probably about 80 or 90% of people, if you sit down and you have an honest conversation, if you're radically transparent, if you explain how you get paid and what your costs are, and you explain why you're betting on the interest rate market going down, they love you for it. And I said it doesn't really help your purchase business, but that's not true. I'm doing a couple purchases from people that I didn't get from refinances, that I got from people that I didn't get from realtors, right? I got them, they're friends of the guy that refinanced them.
Yeah.
Hey, this dude's sharp. This dude's a professional. Like, call this dude. He's gonna, and then they're doing the sell for you. I say sell, they're doing the explanation for you beforehand, right? Like,
Yeah.
this person's already coming in and they're thinking, oh, this guy's a pro. He's going to take care of me. So I did this, at 7 or 7.25 because I got really frustrated. I got into like temporary buy downs and giving away closing costs, and just, I'm not going to worry about the rate anymore. I'm just going to talk about costs, and I'm just going to talk about how we take advantage as the market goes down. Carl, at 6.2, I think, is the national average right now. I think the market's still got time to go down in the next 3 or 4 years. I think this is a winning strategy until you see a 4 handle on it, until you see the interest rate typically start with a 4. I think most loan officers would do really well to take on that strategy if you're looking to sell more refinances. And that's why I say, we might accidentally close 300.
I saw a report. Gosh, I hate quoting this thing off the top of my head without it in front of me, but it was something like, I think it was something like 70, and I referenced here before, but off the top of my head, I think it was 68% of all refis last year. I remember what it was. It was 70% of all last year was cash out refis.
Mm-hmm.
And then I think it was 60% of those were to a higher rate because the cash out solved a problem, like it solved another problem. So how do you get most of your purchase deals? Because if we look at the math here, most of your deals are purchases. How do you make that happen?
So I got 3 or 4 things. One thing is paying attention to your past customers. I just hit, we started working together in 2018. I'd never done a loan before. I went to one of Carl's 3 days. Shout out to Mike Durr, brought me along. He goes, you got to come see this guy. And Carl says, hey man, this is not for you if you've never closed a loan. This Freedom Club thing, it's pretty expensive, but we've got the book. You should struggle and you should figure it out. But one of the things Carl said is, I don't know if I'm quoting Carl or the Bible, but you have not if you ask not, right? I mean, I'm quoting Carl, quoting the Bible there. But Mike goes, he's not going to coach. He's not going to do that. I go, well, what if he coached us together? Because Mike was on the fence about the Freedom Club. What if we coached together? And he goes, he's not going to. I go, Mike, let's talk. So I went up to Carl. Hey, Carl, I've never closed a loan before, and I know you said that's not for the Freedom Club, and I understand what you're saying, but I was an entitled, and I put together a title company that closed 2,500 or 3,000 loans. And he put his arm around me. He goes, this is for you because you understand, the real estate industry and stuff like that.
Yeah.
And we have something for you. And so that was 7 years ago. Well, the typical person is in their house for 7 years and then their mortgage for 4.5, right? So my database is just starting to, this is the Wednesdays. They're just starting to be buying more houses. And because we did the things that you teach about in your coaching, we've been sending the postcards and we've been keeping in touch with people and all the good stuff you teach. We have that. We have realtors that we've been working on for a long time. One of the deals is I built my team properly. Shout out to Kaylee. Shout out to Caitlin and Jennifer and Heidi and all the ladies on my team, right? I say my team, Kaylee's team. She handles all my ops as a third party, and
Yeah.
those are the people underneath her team. Bifurcate sales and fulfillment, right? My win in January was of our 14 deals, the slowest one, the one we were the latest on was 3 day documents at title 3 days before closing. On
Wow.
average, we're getting them there 6 or 7. I haven't missed the closing date in 2.5 years. And I say I haven't because Kaylee's
Mm.
awesome, because I found a rock star there, right? And so when you do that, you get a lot of listing agents, especially when you're doing your Tuesdays. So that's one. And then the other one that I get a lot of business from, and I would encourage everyone to do this, is Longhorn football. I mean, it's not Longhorn football for everyone, but if you know me, if you know anything about me, my order, what I care about is faith, family, and football. And on a bad day, it might not necessarily be in that order, Carl. I mean, I know you're a big NASCAR guy, right? But we want to work with people that know, like, and respect us, right? That's who people want to work with. Is
Yeah, but how do you get to meet them in the first place for them to know, like, and trust you?
so I advertise. I'm buddies with the guy that has the Longhorn podcast. I advertise on that. I've got message boards that I've been posting on. Carl, I posted for 15 years on message boards before I ever became a loan guy, and everyone knew me. And then all of a sudden, I became a loan guy. And about a year, and I thought, hey, these people know me, and they know I'm a big football fan, and they're a big Texas football fan. Like, why
Yeah.
don't I just tell them what I do? Why don't I just tell them, like, hey, by the way, I'm a lender, and if you need a loan, I'd love to help you out with that. Because whenever you're talking, what we're talking about is affinity groups, right? Like, whatever, and for most people, it's not going to be Longhorn football, right? For me, it is, but it doesn't matter if it's NASCAR, it doesn't matter if it's MMA, it doesn't matter if it's gardening. One of the guys I met on there, I started an Astros podcast with baseball. He and I do an Astros podcast.
Hey there. Hey, if you're loving the tips so far, be sure to hit that subscribe button right down there and then tap the little bell so that you never miss out on more free, cool tips coming your way. Also, I would love to hear from you. Drop a comment beneath there. Let me know what you think or tell me what you'd like to hear next.
A lot of mortgage brokers have podcasts about mortgages that probably 3 people listen to. I know yours is not the case, but how long have you spent building your following so that people will actually listen to your podcast, right? 20 years, something like
Yeah, a
that.
long time. Long time.
Most mortgage guys, if they wake up and say, hey, I'm going to do a podcast, they're probably not super, super fired up about mortgages. That the passion probably doesn't come through. I'm passionate about mortgages, but like 1/10 as much as Longhorn football or Astros baseball, right? And no one, and you can put out all the first time home buyer. Someone buys a house, Carl, and then they're not listening to your mortgage podcast. They might find you and they might this and that, but if you have, like, we have 500 people listen to our podcast, right? That's 500 people in my database. That's 500 people that want to spend an hour and a half listening to me and my buddy talk about the Astros. That means they probably like me, right? And if they
Mm,
probably like me, they probably want to buy a house. So I think everyone should do a podcast, and very, 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 very few of them should be about mortgages, right?
mm,
Build your tribe and then monetize it. Here's the deal. If you're in a tribe that someone else has already been built, go to them and see if they can help you monetize it.
mm.
That would be my that would be my, beyond what you teach. That would be the one. I mean, you teach about marketing your tribe and your database, right? But that would be the one insight that I have that I didn't get from you. And I remember you talking to me about it, and you go, gee, I don't know if that work. I don't know if that's going to work. And I was like, I think it's going to work. And it has worked out. That's probably 25 or 30% of my referral source. Here's the other thing. Pay attention to what your tribe is. Like, my tribe is a bunch of people that are listening to a podcast about Longhorn football, right? So if you're listening to a podcast, you're probably in your 40s or 50s. Okay. Just by the
Yep.
demographic stats.
Yep.
If you're listening to a college podcast as opposed to a pro college podcast, you're probably associated with a university. So I got a bunch of 40 and 50-year-old university graduates listening to my podcast. And in metro areas around the state of Texas, Carl,
Mm.
those loans don't suck. Those are usually 800 credit score loans. People buying $1 million houses, putting down 250,000 and topping out at whatever. Now we have it's a lot different when you advertise on the YouTube. The YouTube client that you get looks a lot different than the podcast client you get. So when you're talking about building your tribe, also try to figure out like what tribe makes the most sense to really talk to a whole lot is what I would say on that, right? And you should be able to puzzle that out.
So what was the difference? What is the difference between the YouTube and the podcast tribe? Like,
This trends younger and first time borrowers and stuff like that. The dude that's listening to the podcast is not at his computer, right? He's listening on his cell phone or his car, or
walking,
probably
yeah.
while he's driving,
Hmm.
and probably while he's doing one thing to the next. The guy watching on a YouTube is literally watching it. He's sitting at his cubicle or at his, that guy probably has more free time than the podcast listener.
Yeah.
And, you know, the older we somewhat the older we get, the more free time we have. But like when we're in our 40s or 50s, like we're working on really getting after it career wise, right? You have less free time because you got family, you got whatever. I can subscribe to your podcast and it'll download and I'll listen to it in the car or where I'm working out or whatever. I can't sit down and watch a YouTube.
Yeah. Hmm.
That's my guess. I don't know that that's true, but I've
Yeah.
thought a little bit about it. That's my supposition.
I think because I think, the amount of times I watch something on YouTube is almost never quite just
Mhm.
quite perfectly. Whereas on podcast, I probably listen to podcasts, I'd say 3 hours a day.
Yeah,
Cause I go on a 2 hour bike ride in the morning. And
sure.
so I listen to it then. And then, if I'm walking in the afternoon or, you know, doing
Commute.
something,
People listen to that on their commute. No one listens to
commuting.
terrestrial
Yeah.
radio anymore. I
Yeah,
don't think.
like that's like Friday. I'm driving up to. We have a house up in North Carolina. We're going up to, and it takes about a 12-hour drive. And for 10 of that 12 hours, I'll be. I've become a podcast fanatic.
Absolutely. I'm either listening to a pod or a book on tape. One or the other.
I used to read a ton or read. Well, I used to read a lot of books, and then I started listening to a lot of books, and I found I can listen to them faster. I can read them.
Yep.
And I can play them at like 1.3, 1.4 speed and actually have more retention than at playing at regular speed. And then the podcast came along. Gosh, I almost never listen to books anymore because the podcast seems to, a wider variety of topics or a wider variety of conversations about the same topic, so I don't know.
Absolutely.
Yep. So if you were to say, boy, the one thing that really made a difference that helped me go from 47 to what'd you do last year? 100, 150?
150.
Yeah,
Yeah.
the one thing that helped me go from 47 to 150 was,
You know, being really intentional about what I was going to do and set out to do. Like I said, some of those were a lot of those were refi, right? That I
yeah,
like get out, not get out the door, but a lot of the I created my own refinance boom, right? Most loan officers are not doing 50 refinances in the quarter. They're not refinancing everyone that they did at the beginning of the year, at the end of the year, and then have them teed back up for June, right? So that was a big deal on the refinances. And the other one was just like having a good team. Like Kaylee is my secret weapon. Like you showed me the way, going back into the agreeing to be in the fan club, right? Like this is funny. I was telling my daughter, I was like, yeah, I'm going to podcast with Carl White. And she goes, who? And I go, the guy I'm always quoting. And she's like, oh, yeah, that guy. I was like, this is my 10-year-old. My 13 and 14-year-old absolutely know who you are. The 10-year-old was a little hazy, right? And I said, yeah, your mommy said Carl's running a cult. And she looked at me and she goes, what? Mommy said he's running. I said, yeah, because we went down there in 2018. We went to a Freedom Club event, and it was the only one she's ever gone with me. And she said everyone would stop her in the hall and be like, "Is this your first event? Like, you don't understand. This is going to be so awesome. This is going to change your life, your family's life." And she goes, "The way everyone's talking is like they're trying to get me to join a cult." And I was like, "No, no, no. Like this is the case." And all that stuff they said went became true, right? So the first thing is to get someone else that has the plan, right? And one of the things Carl says, sure you said on this, but I'll just reiterate it, is hey man, we were hacking through the jungle when we first did this, but we've been at this long enough that we went from hacking through the jungle to building a dirt road, and now it's a 3 or 4 lane highway, right? And just
Mm,
do all the stuff that all the people that came before you do because it works,
mm.
and then the second thing is just like figure out what it is that you want to really focus on and be intentional and do that really well. And then what I was going to say with Kaylee, find yourself a Kaylee. Find someone that you just don't worry about the deal. If Kaylee tells me a deal, it's a deal. I tell my realtor, I don't even think about that. If Kaylee tells me we can close in 14 days, then we can close in 14 days. And I tell the realtor that. If Kaylee tells me, hey, we need 45 days and I don't know about this, then I tell the realtor that. And I don't ever think about that, Carl. All I got to think about is finding the next deal and structuring this deal the proper way so that I'm a professional, so that I've got it locked in my brain what we're trying to accomplish for the rest of the life of the loan, or not the rest of the life of the loan, the rest of that person's life as a homeowner, if that
Yeah,
makes
yeah.
sense, right? So those are the three most important things. Get yourself a Carl, get yourself a Kaylee, and then think about what it is that you're well suited to, and just laser focus in on that would be what I would say.
Basically, what I heard you just say is leverage.
Sure.
Leveraging other people.
Your time. You have to let, right? We've all only got 24 hours in a day. So we can either decide we're going to work 3 hours more than everyone else, or we can get someone to force multiply our time and make it more valuable, right? So
Yeah.
that we can accomplish more. And I started the coaching up again after not doing that for like 4 or 5 years. And, that's one of the things, no, just full transparency for everyone else. I started doing pretty well, and then COVID hit, and we stopped getting together in Freedom Club, and you know, basically loans were falling out of the tree if you were in the business there. Like
Yeah.
you couldn't walk down the street without three people wanting to do a loan with you, right?
Yeah.
And so I got away from that, and then I joined a new company, and they started having some get-togethers. So we're kind of like the Freedom Club, and I was like, okay, I can deal with this. But once I got back to the spot, Carl reached out and said, hey, we're beta testing, and we're trying to see if we can take people that are producing high and sort of double their production. I said, well, if Carl's asking, I will definitely be involved in his beta test, because I just feel like I owe you so much in my career. And I owe Mike for introducing me, and I owe you for teaching me to market to your database, Thor's Hammer, to find a Kaylee, and all the stuff I'm talking about is other than the Longhorn football and maybe creating your own refinance boom, it's all stuff
Mhm.
that you've taught me and that you've told everyone else, I'm sure.
Good stuff, man. It's been a fantastic journey, hasn't it, Gabe?
It has. I love what I do. And uh, I always, it's funny, my dad was a mortgage guy. I went to law school, and I was in title, and it, like I my dad viewed himself as akin to a used car salesman. And one of the guys he worked with that I was entitled that became a customer of mine that I knew beforehand from growing up, he just look at me and he'd shake his head and he goes, it disgusts me that you're not being a lawyer, that you're going into this, because he viewed himself as a used car salesman too, right? And neither of them were bad. They're both good at what they did. And honestly, they both helped the customer. They just thought of it as like not a real professional thing. But
Hmm.
there's a lot of stuff I could do. And look, as mortgage guys, we're not coming up with cold fusion or brain surgery, and we're not changing the world as mortgage guys, right? But you know what we do?
Tell me.
We help people find the American dream, because I do not believe you can live the American dream without owning your house. There's literally like 80 or 90% of people, 80 or 90% of their net wealth is built up in the house. I've got, you know, not rich dad, poor dad, but poor grandparents, poor grandparents.
Hmm.
One of them bought a house in California and they left their 5 kids $650,000 to split up. One of them didn't buy a house and their 2 kids split up $1,500.
Mm.
And if that does, like, owning a home makes for better citizens, it makes for better communities, it makes for more wealth, it makes for people able to leave a legacy. So I love the fact that even though I'm not changing the world or anything like that, like I'm providing wealth for my family while helping other people make the American dream and making them better citizens. And you know, when you can do that a couple hundred times a year, you just say like, "Hey, isn't this cool?" And guess what? If I can do this 500 times next year instead of 200, I'm going to make 3 times as much money, right? And like, if you can't
Mhm.
get excited about doing that as far as being a mortgage guy, then you're in the wrong. Then you've got the wrong mindset. Fix your
Mhm.
mindset, and if you really feel that way, you're going to see you're going to see your business go up. I think and to your point as far as compensation, one of the things I remember you saying is, "Hey guys, we don't sell pencils here." Like
Mhm. Mhm.
it's worth it. It's worth getting that next loan because it's a pretty nice commission check, and you're doing something to help and benefit society. So like I feel like I'm super lucky. You're going to meet my son in March. I'm taking him to the deal. Like he's coming with me. He's
Oh,
13 years
to the pipeline accelerator.
I homeschool my son. We're going to the gym to work out and whatever. He's gonna go on 3 trips with me. He's gonna go on my company trip. He's gonna go on a vendor trip, and he's gonna go on the Carl trip. Right? Like,
Hey,
how
man.
cool is it that my 13-year-old, like, I'm teaching him, like, we're reading Tom Sawyer together. We just finished reading Robinson Crusoe. We're gonna, he's doing his Bible in the other room right now, and then we're going to do Texas. Like I'm learning Texas history all over again because I got to stay a chapter ahead of him in the book, right? But like
Mhm.
that, I get to pick up my daughter from dance every day. I get to drop my other one off at school. Like anywhere if you have a team that's good at production, anywhere you have cell phone reception, you're on the job, which means that some people can think that's a bad thing, but what it means is you can be anywhere doing your other stuff, and you can catch that call that's going to lead to a commission check that's going to lead to you helping someone else. It's going to lead toward you making better communities. And like when you really like when that really pops and you really get that, you're just like, how lucky am I? Like how lucky are we that we get to provide for our family? We get to be involved in our family. It's funny. A couple of years ago, I started doing a deal where not coaching because I'm a bad manager and I'd probably be a bad coach, but I'm a good like analyst, right? And so I was charging people like 5 grand to go out, and I'd be like, hey, I'll sit at your desk for a day. I'll take apart everything you do. I'll see everything, and I'll write you an individualized plan that's based upon our conversations. I'd follow up with it, and I did like 3 or 4 of those, and everyone started doing more loans, but none of them like had a better life. And I stopped doing it because I like figured it out. I was like, I'm making $250 an hour. And I was like, I could put my head down on my desk at the office and make that much. The reason I
Mhm.
wanted to do it was because I wanted to improve people's lives, right? Which you get to have conversations with people like me that like, you're like, hey, I hope you pat yourself on the back and you say, hey, I helped make that happen, man. Like and I wanted to do that for other people, but they didn't find their Kaylee, and they that is so important. Like as far as like all the stuff that I was talking about what a wonderful job this is, it becomes a wonderful job if you find your Kaylee, because then all of a sudden you can do all the stuff I'm talking about,
Mhm.
and you're not. I think there's a lot of people that don't want to do more than 4 loans a month because they're trying to do it all themselves, and if they do another loan, it's 25% more work, and now all of a sudden they're working 50 hours a week instead of 40. And I wasn't able to like really do that well enough with my consulting gigs, so I stopped doing it because I was
Mhm.
like, I want to improve people's lives. I want people to like love what they're doing. And you go to these conventions and you see everyone sort of like beat down and worn out, and you see the meme with the realtor at the closing, and she's the guy at the closing, and they've got the thought picture of the baby and the kids, and that's true. And the realtor at the closing, and she's got the commission check, and then the mortgage guy at the closing, and they're in a bathtub with a toaster oven, right? Because like we're doing it wrong as an industry, and I would like to think, and I would like to hope that this conversation could maybe inspire someone to like start doing it right, because it is an awesome job, man. We're blessed and fortunate and lucky. So that'd be what I'd have to say.
I agree with you. There are not a lot of attorneys. I mean, there's some, but it's a small percentage of attorneys that make what we make. those of us that are at the top of the food chain. It's
And
they're
almost none of them are happy.
mm,
Almost none of them are happy. Like I
mm,
look, every now and again I'll catch a call on Saturday at 5 o'clock while I'm doing something else, and I'll roll my eyes a little bit. But then I think about all the other stuff, and I think about all the days that I'm like working out with my son at 2 in the afternoon in the gym, and I'm like, this is a very, very like small price to pay because you know how can you not be happy about this job? We're
mhm.
helping people, we're helping people, and we're getting paid well doing it. And I don't know attorneys that feel that way. I just don't.
Yeah, yeah. I'm just a week doesn't go by that I don't really think about how blessed we are that most of us, like, I don't know of anybody, I'm sure there's some, but I don't know of anybody that graduated high school or college or whatever and went, I'm doing this so I can become a loan officer. That most of us stumble into it one way or another. And that frankly, that they don't teach this like in a trade school or community college or high school. I don't even know how you do it, but it's amazing. So anyway, all right, brother. Well, I appreciate your time today, Gabe. Hey, I always like to end this. Give us one action item. So, hey, the loan officers listening to this, whatever you do, make sure that you
Call Carl for a consultation to set up. And guys, I didn't put him up to that. If you've already done that, then my next one is find your Kaylee.
find help, surround yourself with good help, leverage.
Ops manager, right? And maybe it doesn't start with an ops manager, but that's where you need to be pointing toward. Maybe it starts with just another set of hands, right? Like an assistant, but like you should be able to get to an ops manager sooner rather than later. And you just have to at some point in time, you just have to do it. Just like write Carl the check for his closing, sign up for not closing for his deal, get the the guide, the 4 lane highway that they've made out of the jungle, right? Because you're probably in the jungle. And if you've already done that, then go, the first exit is go look and find your Kaylee.
Hmm. Bro, that's good advice. The day that I met uh, Diane, who's my uh, um, partner originally in the mortgage company and then in the training company. Um, yeah, if I didn't have her skill set to help me with all this stuff, or me help her, was probably
Mm-hmm.
the more accurate way of saying it. It would sure be a different world. So, all right, man. Hey, appreciate it, Gabe. Hey, I have zero doubt that you're not going to hit you're going to hit your new target point, and I look forward to talking about part three. So, for part one was 0 to 47. Part two was 47 to what 150
200.
or
Yeah. Oh, yeah.
200,
47 to 150. That's what I've done.
150,
Yeah.
and then the next one.
300.
Yeah, I think going from 150 to two. Don't get me wrong, that's a big increase, but
Yeah.
it's not an exciting increase. I for a guy like you, I see us hitting that 300 mark. So good stuff.
Sometimes I throw out stretch goals and I just say, hey, maybe God will help me accidentally stumble into another one or 10,
Hmm.
And so that 200, if I'm being honest, that wasn't a stretch goal.
Yeah. Well, 20 in February is a darn good start. Appreciate you, Gabe.
Thanks, Carl.
All right. Well, I guess a shameless plug is out of the bag. So yeah, we'd love to walk you through that same first meeting that we walked Gabe through. And so if you just go to getmoreloans.com. Oh, I don't know. Maybe we'll help you get more loans.com. Go check it out. Would love to have that conversation with you. It's not a sales pitch. Like what we'll do, we can do a couple things. Number one, we can walk you through the training website that we have, and show you all the resources that's available to you that you might be missing out on. And then number two, we can actually put together a plan for you, whether you become a member or not, right? I mean, obviously, we'd like you to become a member, but even if you don't, you'll leave with a complete plan of exactly what to do for the next 90 days. So, yeah, getmoreloans.com. Thanks a lot. Appreciate you, Gabe, and we'll talk to you when you call in. Bye bye.